Hello and good evening, viewers. Thank you for watching Time with your banker and financial advisor. This evening, we have Mr. Augustine Donkor, the head of Market Conduct Supervision of Bank of Ghana. We'll take a short break. We'll be right back. Good evening, Mr. Augustine Donkor, and welcome to Time with your banker and financial advisor.
Good evening, and thank you.
We thank you for honoring our invitation to come on the program.
You're most welcome.
Mr. Donkor, 2 sessions back, we had representatives of Bank of Ghana from your department, Financial Stability Department. They spoke about market conduct that is empowering and protecting consumers of financial products in the financial industry. So far, we know that the customer or the consumer has 3 avenues to lodge complaints. The first is with the institution that the person banks. Second, with Bank of Ghana. And then lastly, the customer can seek redress with the courts. Which area of bank operation generates the most complaints according to your data so far?
So at the Market Conduct Office in Bank of Ghana, we received several complaints from customers of the financial institutions, bordering on various subject matters. These include complaints relating to deposits, specifically unauthorized withdrawals or debits on customers' accounts. We also have complaints bordering on ATM transactions, okay, where typically customers will complain of ATM machines not dispensing cash, but their statements or accounts receiving the debit. We also receive complaints on remittances. Okay, remittances where customers who have been remitted some funds, okay, go to their institutions and they are told funds have already been disbursed or taken out and stuff like that, and so many other subjects. However, the majority or the bulk of the complaints that we receive from customers relate to loan transactions, okay, loan administration. That is where we have a lot of the complaints coming from. Customers would typically complain of wrong calculation of interest. Customers may complain of over or under deduction pertaining to the repayments. Complaints may also border on the level of the interest themselves. Customers may come and then complain that interest rates charged are too high in their view. Customers may complain on assets that were used or that they offered as collateral to secure the loans. Typically, after servicing the loan, the complaint is that service providers are not releasing the documents on such collateral to them. And currently, we are receiving lots of complaints relating to credit reporting issues, where customers who have or who claim to have paid off the loan still have their names with the credit reports as still being in debt with their service providers. You know, they have liquidated their loans, but their credit reports have not been updated. Now, this will usually prevent them from accessing further credit from other service providers. Okay, so currently, that issue is also forming a good part of the complaint that we are receiving. So to answer your question, generally, it has to do with loans.
You spoke about interest rates, customers complaining that interest rates are high. After they've signed the loan contracts and have started paying. And I was wondering, what did they read? What did they see? Or what understanding did they get before they appended their signature?
So I actually need to mention that the reason why we receive lots of complaints on loans can be twofold. Firstly, from the provider side, and then secondly, from the consumer side. By the provider side, what I mean is the service providers may not have done their bit. They may not have showed good faith. What I mean by that is they may not have been transparent enough in their dealings with the customer. They may not have disclosed the kind of information that's expected to be disclosed to the customer in loan transactions. Okay? Then, on the part of the consumer, where we have a lot of the issue, consumers most of the time do not take their time to read and understand the terms and conditions of the products that they may be buying. So specifically with the loan, typically the service provider will give you a loan agreement. It is key, it is so important that customers take their time to read and understand the issues raised in the agreement. But unfortunately, from our experience, we realize that not many customers are able to do that. Okay, so issues included or captured in the agreement that they may have signed to without reading will now become a subject for complaint. So just like you said, they may have signed the document without reading. So when the repayments begin to hit them hard, then it will force them to go and now refer to what was in the agreement they have signed, only to realize that the interest rate is at this level and they find it to be on the high side. Then they'll come to complain. If they have taken the trouble to read the agreement, some of these issues may not have arisen.
Is it because customers are made to sign under duress or undue influence, or they don't have enough time to read through? Because you know, sometimes when you are in need of money, you just want the money. So anything that is brought to your attention or is given to you, you just append your signature and then you are off. Is there a way that the consumer can be protected so that the consumer can have insight into whatever he or she is signing? Maybe the person can be allowed to take the documents home, or is it allowed?
Usually with the complaints related to loans, we have realized that the cause may be from the provider or from the consumer. Just like you said, we have encountered instances where some of the service providers have actually not helped matters. Some of them may just be interested in getting the customer to sign off for the loan. Okay, so the loan is disbursed for the process to continue on, without taking time to encourage the customer to read and understand the terms and conditions. You know. However, like I said in the beginning, we also are aware of the fact that customers most of the time do not take the trouble to read. Now, at the time they are in need of the loan, their entire focus is on the money. Okay, we understand that some of the reasons why they may be going for the loan may be so urgent, you know, that they are in need of the money. But that is where we want to give caution that no matter how urgent the situation is, this is money that you are going to pay. It is not for free. And therefore, you will have to take the time to understand and appreciate what the consequences are, what the terms and conditions are. If customers do this, it is not likely that after the contract has come into force, in other words, after the loan has been disbursed and then the repayment begin, they are going to be complaining on so many other issues. But the biggest issue is the fact that they are always in a hurry to access the funds, for which reason they did not ask the relevant questions that matter. But on the issue that you raised, to help protect the consumer, okay, on this issue, Bank of Ghana's measures put in place, as captured in our disclosure and transparency rules, require that for every loan transaction, the customer should first be provided with what we call a pre-agreement statement. Now, this statement basically summarizes the key terms and conditions of the facility. Okay, so typically it will capture the amount of loan being requested, the amount that has been approved for disbursement, the interest rate, repayment amount, repayment period, issues of penalties in terms of default, and key issues or information relating to the transaction. Okay, now the requirement is that before every transaction, before every loan agreement is signed, the consumer, the customer, should be given this pre-agreement statement. The idea is that for those of them who may not be willing to read the entire agreement because probably of the length or whatever reason, at least this pre-agreement statement, which is usually a 1 page or 1.5.
It's like a brief of the whole contract.
It won't go beyond 2 pages. Okay, we usually advise that it should be just a 1.5 page document. It becomes easier for the consumer to read so that they grab the key or relevant key terms and conditions of the facility. Now, this pre-agreement statement, the requirement is that customers are actually at liberty. They have the right to take it home for a period of up to 5 days. The idea is that to afford them enough time to read and then understand.
If they cannot even read, they can ask somebody else.
Exactly, they can ask somebody else. To also afford them good time to collect similar statements from other service providers for the purposes of comparing. Okay, so we encourage them to shop around, move from institution to institution, get about 3-4 pre-agreement statements so you can compare. Now, the idea is to put them in a position where they are better informed to make good decisions regarding the loan facility. So yes, they are at liberty to, in fact, they are right. It's a requirement for them to be provided with this pre-agreement statement. If they so wish, they are even allowed to take it home for up to 5 days. And then when they are convinced that they fully understand the terms and conditions of that particular facility, then they can come to the service provider to sign off the agreement.
What are the processes and procedures that Bank of Ghana has put in place to ensure that financial institutions that they are regulating are complying with the processes and procedures to protect consumers or customers of these financial institutions?
Okay. All right. So within the Bank of Ghana, specifically within the Financial Stability Department, there is an office called the Market Conduct Office. Now, that is its responsibility or its duty. Its duty is to ensure that service providers, licensed financial institutions, conduct their businesses in a manner such that the rights of consumers of their services and products are not abused or taken for granted. Okay, so the office has put certain measures in place. First of all, there are laws, okay, in place to govern the relationship between the service providers and their customers. Bank of Ghana has also published some guidelines and directives for the compliance of service providers, also geared towards enhancing the protection of the interests of the customers. Now, these laws and directives or guidelines, as I've said, are to ensure that service providers conduct their businesses in a manner such that they do not hurt the rights of the customers. The customers are key in the space. Okay, the customers are very key when it comes to the banking business. In fact, they play a key role in financial stability. So Bank of Ghana recognizes this and therefore tries to ensure that their interests are protected always. For instance, aside the laws, the directives or guidelines that I made reference to, one of them has to do with credit administration. Okay, this document is solely on the administration of credit by the service providers. It is more or less like it spells out the do's and don'ts, more or less, of credit administration. So for instance, it talks about what the institutions should do when it comes to the delivery of credit, in terms of their duty or obligation to disclose key information to the customers. Okay, their duty to be transparent with when it comes to credit delivery. We do not want institutions where issues like certain charges and fees relating to the loans are not disclosed, only to be unleashed on the customers when the repayment situation begins and stuff like that. Okay, so now these directives actually forbid such practices.
You see, sometimes one may need funds or facility, or let's say a loan, for certain one or two reasons. The person may need a loan, but upon second thoughts, the person can decide that I no longer need this loan. A person can also go for a loan, and then maybe the person was expecting some funds. The funds were delaying, so he decides that let me quickly see whether I can get some monies and then pay later. So these two scenarios, if the person gets the money before the loan, the completion of the repayment of that loan, and he goes to pay the institution, I heard that some institutions charge some penalties and all that, and it's a worry to most consumers or customers of bank products.
Now, let me begin by saying that, first of all, Bank of Ghana does not permit service providers to coerce customers into signing for loan agreements. We have actually encountered complaints in the past where some service providers, particularly some of their marketing agents, virtually coerce customers into signing for such loans. Now, what happens is, for some of them, after they have signed for the facility and then it is disbursed, it then dawns on them that after all, they do not need the facility, and then they are not too sure what to do with it. Or some of them, because they have access to the funds now, they now begin to utilize them, and then the repayment becomes an issue. But what we have done in our disclosure and transparency rules is to say that whether the customer signed for the facility as a result of undue duress, okay, or any form of coercion on the part of the service provider. So let's say due to, in quote, force, the financial institution virtually forcing them to sign for the facility, or they themselves having decided to take the facility, okay, based on maybe certain pressures or whatever, but then after the disbursement of the facility, they're realizing that after all, they did not require this loan any further. Like the example you gave, maybe there was an agent needed for the money, but just as they signed for the loan, or the loan was disbursed, they were able to raise some funds elsewhere, so they feel they did not need this facility anymore. There is something we call a cooling off period. The cooling off period refers to the first 5 working days following the disbursement of a loan into maybe the account of the customer. Okay, so this is the situation where the loan has been disbursed, it is now sitting in your account. You have 5 working days to decide whether indeed you need this facility. If it is that you decide that after all, you don't need this facility,
that is within the 5 days.
Within the first 5 days. Okay, if you decide that you no more or you no longer feel need for this loan, you have the right to return it to the service provider, to the lender, okay, provided you satisfy 2 conditions. The first is that you officially write to them declining the offer that has been given you. That is, telling them that you no longer want to accept the facility. And then the second and more important condition is that you should not have accessed the money.
That is, you haven't touched the money.
You haven't touched it. Okay. If you haven't touched it, and then you write to the institution that you no longer require this money, then the directive is that the institution should take back their money and should not penalize you.
Within the first 5 working days.
In other words, should not charge any penalty. Okay. All fees and charges that were taken upfront, they are gone. But for the amount that was disbursed in your account, which you are returning, they have to accept it and not penalize you any
But
further
the customer
on it.
is penalized in the long run because the processing fees and all those charges.
So unfortunately, for the troubles of the financial institution, they are also exactly. Yeah. Then, when it comes to the early settlement, I have to mention that that is one area where we have lots of complaints. And I would actually want to use this
early settlement
early settlement of loans.
Yeah,
okay, where you want to pay off, a customer wants to pay off their loan ahead of time. For instance, you have taken the loan for a period of 12 months. After the 7th month, you decide you want to go and pay off this loan and free yourself from the agreement.
Yeah, it's very interesting. Mr. Donkor, we'll take a short break. Viewers, we'll take a short break. We'll be right back. Welcome back, Mr. Donkor. You are telling us that if a customer decides to pay his loan before the end of the term, what are some of the penalties? Or let me come this way. The customer has 5 working days to decide whether he wants to take a facility or not. That is the loan that has already been disbursed into his or her account. 5 working days, not 5 days. 5 working days. So it is Monday up to Friday. So if the money were disbursed on Wednesday, he has Wednesday, Thursday, Friday, and then the following week, maybe Monday and Tuesday. 5 working days. Sure. If he hasn't touched the money, he just writes to the bank and the bank withdraws the amount from his account. But the charges that involves the creation of or the creating of that facility, that one, the bank is entitled to those funds or those monies. That's their charges. And indeed, banks are supposed to charge for all transactions that are done. By law, it is backed by law. They are entitled to their commissions and fees. So if the bank takes that one, that is okay. But the main amount, the bank must withdraw from the customer's account. After the 5 days, suppose still the customer doesn't need the money, he has still also not touched it. Are there other penalties? Can he still write to the bank for the bank to withdraw the funds from his account? Okay,
so we make a distinction between the cooling off period and then what we call early settlement of loans. Okay, as I explained, the cooling off period refers to the first 5 days following the signing of the agreement or the disbursement of the facility. Okay, once the funds or the loan has been disbursed into your account, per the cooling off period rule, what you are saying is that the borrower, the customer, has 5 working days to determine or to decide whether indeed he wants to pick the loan.
So he can't come back that after the cooling off period of 5 days. Maybe in 2 weeks' time, he still hasn't touched the money. He doesn't need the money. Does he have this prerogative as to the waiving of charges on that amount? Because he hasn't touched the money.
All right. So now we move into the early settlement regime. Okay,
so the early settlement regime starts after the 5 working days.
Yes.
That's the cooling off period.
Yes, okay. So the main issue is that borrowers have the right to pay off their loans ahead of time, anytime they decide. It is a right that they have, except on few occasions where the lender and the borrower agree at the very beginning that for this facility, this is how we want payment to be done. Payment cannot be done before this period, when the two of them agree right from the beginning. But generally, customers or borrowers have the right to pay off their loans ahead of time if they so wish. So that's the first point. Now, the procedure is for borrowers or loan customers to officially inform their lenders, the service providers, okay, about this intention. When that is done, the requirement is for the service providers to provide the customers with what we call a settlement quotation. Okay. Now, this settlement quotation refers to the amount, the total amount of money that the customer needs or is required to pay at that time to close the transaction or to end the agreement. Now, per our requirements, we expect that the service provider will actually outline what builds up the final amount that is given to the customer. In other words, we do not expect that it is just an amount that will be quoted for the customer. The institution should show what feeds into that amount. Okay. Now, previously, we realized that a lot of the service providers were over-penalizing customers who wanted to do this, that is paying off their loans ahead of time. The penalty charges were just too much.
So there are penalty charges for early settlements of loans.
So now what we have said is that customers can pay off their loans ahead of time. If service providers would want to charge or levy any penalty to any customers who decide to do this, the regulation now is that they cannot go beyond 0.25% of the principal amount of the loan that was given out. So a customer has taken a loan for a period of 12 months. At the end of the 7th month, he decides to come and pay off. The service provider will determine the outstanding amount to be paid. That is the settlement quotation. And like I've said, that will include the outstanding amount on the principal, the outstanding amount on the interest, and probably any interest in arrears and stuff. And then, if they want to levy any penalty charges, they include it. But what we are saying is that this penalty charges is now capped at 0.25% of the principal amount of the loan. No institution is permitted to charge early settlement penalty of any amount that is in excess of the 0.25% of the principal amount of the loan. Okay, so we would want loan customers to get this very clear, because like I said, that is one area where we receive lots of complaints from. You can settle off your loan ahead of time. Just ensure that if your lender decides to penalize you for it, the penalty is not supposed to go beyond 0.25% of the principal loan amount that you were given.
I think that all these things must be communicated to the consumer or the customer before the customer appends his signature. Unfortunately, our time is up, Mr. Donkor. So this is where we'll end today's program. Thank you very much for honoring our invitation. Viewers, this is where we'll end today's program on Time with Your Banker and Financial Advisor. Unfortunately, we have to run up, though the discussion has been very, 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 very insightful and interesting. See you again next week, same time on Time with Your Banker and Financial Advisor. I'm your host and telebanker, Betty Ayi.